Welcome back, traders. Welcome to my English video after quite a long time. In this video, we will dive deep into the first present variable gap after 9:30 equity open. This is one of the most powerful and widely discussed ICT concepts. This setup often defines the trading day by revealing where the liquidity and volatility will come. Although I primarily trade Forex and gold, but I believe this concept is universal across all the markets. But the real beauty shows up in Nasdaq, like index futures. That's why we will first see a couple of examples on Nasdaq. Then we will study the setup on Forex and gold as well. For the coming months, I'll be actively testing and trading this concept, especially on gold, and I will share my results with the community so you can see how it performs in real time. By the end of this video, you will learn how to spot the first present fair gap, why it is so important after the equity open, how to apply it across index futures, gold, and forex market, how I'm using it to refine my entries and catch high probability moves. Stay tuned because I'll not only explain the concept but also share live trading examples to show the first presented fair gap in live action. So our first example is going to be on Nasdaq. ICT basically uses 1 minute time frame to trade this and spot first presented fair gap. But I believe we can use 1 minute, we can use 5 minutes as well as 15. The better the time frame you can, like, higher the time frame, better will be the accuracy. So let's check it out. As you can see, Nasdaq is forming again and again new all-time highs. So what is, like, if we look at this market, one thing is sure, the market is going to make another all-time high sooner or later. So we will break down this day, the day of Monday. So if we look at this high prices, clearly we are making higher highs, a bullish trend. I'm looking at this order block overlapping with this fair gap plus this rejection block. So let's mark it out. And we have this fair gap, bullish fair value gap. Okay, we have this buy side liquidity, clean, clean, relatively equal highs. This will be our low hanging fruit, easiest target, like low resistance liquidity. So okay, where is the 930 trigger? I think this candle is going to be the 930. Are we below midnight open? Yes, we are below midnight open. And in my recent ICT series 2022 mentorship, we talk about 8:30 open as well. So let's check it on 15-minute time frame, or better, 5 minute time frame. Prices tapped the order block, and we are in the hourly fair value gap. We can also see some 5 minute fair value gap as well. Let's mark me the 8:30 open. Okay, this is the 8:30 open. So we are below 8:30 open. This peak is enough. It shows that price is very heavy on buy side. We just, like, tag below this low. And now we will target these relatively equal highs. Relatively equal highs. So we have clean liquidity on the buy side. The only thing we need is a fair value gap after 9:30 equity open. This candle is, I guess, the 9 exactly 9:30. So we have this fair value gap right after 9:30 equity open. Mark it out. As soon as price mitigates this fair value gap, we will dive into the 1 minute time frame to find our entry. One more thing, if you look at these down close candles, series of down close candles, price is closing right above this closing down close candles at this candle. So this will mark our change in the state of delivery. And our targets are clear. Lean buy side liquidity, lean buy side liquidity. So once this price side liquidity, this is basically engineered. Our targets are these highs. We will dive into this piece of price action over here. Price is directly mitigated in the last fair gap. In this 1 minute time frame setup, we can again find our first present fair gap on 1 minute. So this is 929, 930, and that is 931. This is going to be our first present fair value gap on 1 minute time frame. So let me first present a fair value gap on 5 was M1. Look at this reaction, beautiful reaction. Our Venom model. I will talk about this model in the next video. Prices rebalance the last fair value gap, taking this high and then sweeping the buy side liquidity, minor buy side liquidity. Do we see a fair value gap over here? Yes, we have a fair value gap. This is enough for our entry. As soon as this candle closes, this will be our trade with the stop loss below this low, and we will target the high. So this is a clean 1-to-2 ratio trade and beautiful price relief. You will see price just took this buy side liquidity, actually engineered buy side liquidity. We take below this low, and then again a sharp reversal, a sharp turn. So let's play it out. And beautiful price relief. It will go one more time because this is again equal highs. We are still in like premium, but of course this target is pending and beautiful price relief. So this is how you will have to trade and spot first present fair value gap. I primarily look at 15 to 5 minutes, then use 1 minute for entries. ICT is ICT, he can do everything with it. But I personally use it on 5 minute time frame or 15 minute time frame and then use 1 minute for entry. So this is how you will have to play this setup. But the most the most important thing is how you are looking at the market, your drawn liquidity. If you don't have any drawn liquidity, this model will not give anything. Before ICT says entries are the least discussed topic in my community, in my concepts, because the most important thing is drawn liquidity. If you don't know where the market is drawing to, where it is going, either it is going high, or it is going low. If you don't have defined drawn liquidity, there's no way you can enter at a best price. No matter how beautiful your entry is, you will like stop out. So the next example we studied on gold. I'm trying to make this video as short as possible. Before like discussing gold, let me show you a live example we did yesterday. I got this trade, I think got the break even, hit my break even. Yes, at this point it hit my break even, but I traded again right after this fair value gap failure. Which is this fair value gap? Look at relatively equal highs, relatively equal highs. Same as Nasdaq we have just studied. And on 1 minute time frame, although unfortunately on 5 minute time frame, we do not see any first presented fair value gap in this leg. This is 930 candle, but on 1 minute time frame, as you can see, 1 minute time frame, we do have fair value gap, the first presented fair value gap right after 930. So I was looking for like a proper breakout about about this fair value gap. Price is like consolidating all the way, creating lows, engineering lows. taking these liquidities all at once, and then we have seen a fair value gap that has been just converted into inverted fair value gap, and we have seen a new fair value gap that is eff- sufficient enough to change the order flow. Once this candle closed, now we see an expansion followed by consolidation. I just wanted a thing back into this fair value gap, like the upper quadrant of this fair value gap, which is going to be somewhere, if we mark it somewhere around here. So I wanted a sting back into this fair value gap to then trade higher. But although it didn't tap, it's okay. It's very likely I got entered from this fair value gap. And I said if I see another entry over here, another a sting back, then I'll enter more, enter more position. So let's study on trading view. Yesterday price action. As we can see, we have a down close candle that will be like an order for us. At the same time, we have this fair value gap. So I'm only marking the down close candle. This is our bullish PD array. Our target is going to be this price at 5 minute time frame. We do not have any fast present fair value gap, but if we look at on 1 minute time frame, we have this fair value gap right after 9:30. So this is like 9:31, 9:32, 9:33, and 9:34. So we have this fair value gap. Price is just consolidating in this range. As soon as we broke above this range, although we did not have any sting back into this fair value gap, but the target was still confirmed. So this was our trade. I traded like targeted 20 pips above my drawn liquidity because it's gold behavior and I know how it performs. The next example we are going to study on gold is like, I guess it was this day. Yes, we'll study this day. If we look at this market, I can see these clean highs, although it might show as a sweep, but these are still clean highs to target for buy side liquidity. So this is our drawn liquidity, 15-minute time frame. Again, clearly relatively equal highs. We have low, high, higher low, higher high. So change in state of delivery at this price with fair value gap. This is our fast present fair value gap. Price broke above this high. It's a closing, not a sweep. So indicating we might sweep another buy side liquidity, which is previous day high. At this moment in time, I can see this very small fair value gap, a tiny fair value gap, but it's still a fair value gap. So this is our 15-minute fair value gap. 15-minute fair value gap because this is like 9:30, 9:45, and 10. Silver bullet applies in these areas on such fair value gap. On 5 minute time frame, we will refine it. As I said, I basically use 15 and 5 minute time frame and use 1 minute time frame for my entries. So in this wave we are looking at, I can see this is like 9:30. Okay, this is our 9:30 a.m. And are we like below the midnight open price or not? Price just needs to tap below the midnight open or take just liquidity. So yes, this is our midnight open, taking liquidity below it. We can also mark our 8:30 open, and we are below 8:30 as well, taking this liquidity. This was, I think, one of the most beautiful trade setup below all the open prices. In fact, below this actual open price as well. This quick, I'll remove these drawing. So on 5 minute time frame, this is our first present fair value gap. And as I said, my personal way of doing it, I look for the first present fair value gap on 5 to 15 minute time frame and trade it using 1 minute time. We have this first present fair value gap. We have this downward candle that will be acting as an order block for us. And once price taps these PDRAs, we will target this price at liquidity because we have traded back into this high. This was our short-term high, our short-term target, minor buy side liquidity. So now we will target the main drawn liquidity, which is previous day high. Let's check it on 1 minute time frame. Okay, on 1 minute time frame, if we look at this example, this is going to be our first present fair value gap. Yes, this one. But I do not primarily use it like this. I basically use 1 minute for entry. I only use 1 minute time frame if there's no like fair value gap on 15 or 5 minute time frame. But at this point, we have a fair value gap after 9:30. Price broke below it, then retested it, failure swing, and we again broke above. So now you can use it as a reference, but not as a primary context. We have this up close move as a Judas swing, then low, low, high, low, low. Now all we need is like two things. I told my students whenever we are at key level plus price and time alignment, you will have to look for these two things. Either price tap the key level, either price tap the key level and then take a liquidity, a short-term low, and then we see a change in state of delivery or market start shift. Or we can also see this kind of setup where we see a failure swing. Doesn't matter if there's an SMT or not. If there's a failure swing, then we can enter again. So at a key level, price is tapping it aggressively. This is one of the criteria we have defined for our key level. So we are tapping it aggressively. We are creating a short-term high, short-term low, and as soon as we see this candle closing above these bodies, this is our trigger. We can also use this candle, like if we use this candle with the stop loss below this low, that's a 40 pip stop loss, and we will target this high, which is 1 to 3 hours. So a very clean setup using 1 minute for entry and 5 and 15 minutes for directional bias using the same first presented fair value gap. This is gem. It is literally like very powerful tool. You can blend it with your drawn liquidity. Again, the most important thing is always going to be your drawn liquidity, how confident you are on your drawn liquidity. And then you can blend these concepts with your bias. In this video, that's all I can say. I'll probably make new videos about this concept, and over the course of next few weeks or months, I'll be testing it again and again on gold especially, and I'll share my results with you. For now, thank you very much. Goodbye.